Wedbush Securities, head of technology research, Dan Ives, joins us now. Dan, I don't think it's surprising for people to hear you pound the table on the tech trade. You've been super bullish. Do you not have concerns now about monetary policy, as the market rethinks the cut for December and the overall frothiness or valuations around AI?
Yeah, look, Sarah, I get some of the nervousness, but I was just in Egypt for 3 weeks. And demand to supply for NVIDIA chips are 10 to 1. Demand's increased, call about 30% since June from what we see. You look at hyperscaler, this is a Capex supercycle. So it's my view, if you're in the second, third inning, to be sort of bearish or nervous here, I just view it as short-sighted because I think there's a tech bull market that goes on for another 2 years. And I think these are golden buying opportunities for the names that I view where Street's underestimating numbers 20, 30% over the next 12 to 18 months.
But do you think there will be a point where the Capex should get more scrutinized, until the profitability materializes to match the level of spending?
Sure, and look, and I get the scrutiny. Like if you look, obviously, Meta and Oracle, and you see some of the worries there, the circular financing in terms of open AI. But to me, it's all about you're building out a new economy on the consumer, on the enterprise front. For every dollar they put on CapEx, they're going to ultimately make $8 to $10 on that over the coming years. So I just think that is the best move for these companies in the arms race. And that's why for Meta, I've talked about that's a table pounder on that stock in the sell-off. Oracle, same thing. And, so many times we've talked about in your show, like these are the opportunities, whether it's DeepSeek or other moments, and then investors are like, I missed it, but these will be the opportunities. I think you're going to have a massive tech rally into year end.
Dan, Oracle's a great example. What explains that early September gap getting filled as we are back to the 200-day here for the first time since June?
Yeah, Carl, I think it's just worries about debt, taking on financing, CapEx, the depreciation, the open AI pop. Like, did they get over their skis? And actually, I disagree. I think Oracle, this is a massive renaissance that they're going to see. You talk about they're 2% penetrated within their install base when it comes to AI. Everything they're doing are the right moves. And I think this sell-off here, we're going to look back 3, 6, 9 months from now, and this was just, I think, a golden buying opportunity on Oracle. And I think right now the nervousness is coming out, but it just comes back to 3% of U.S. enterprises have gone down the AI path. And I think that goes to 20% over the next 18, 24 months. That's what you're playing for, especially in the second, third, fourth derivatives. We see it, cybersecurity. Right. I see human proof authentication. I see it on, infrastructure, Nemesis, CoreWeave, and others.
Does that view extend to Tesla, which, as we said earlier this morning, is now red for the year and worst performing Mag 7?
I think actually Tesla is probably, of all of these names, that's probably the one to me that sticks out the most. Because in my opinion, the future about autonomous and robotics, Musk, obviously right now, wartime CEO. You look at the coming years, I think Tesla's a $2 trillion and ultimately a $3 trillion market cap because autonomous, 80% autonomous, I think Tesla's going to own. So I get the stock selling off here because you can't see it in the numbers. But this is something where I look out, 600's base case, 800's bull case. And Carl, that's my view. I think this is only, like I talked about, this is just the early days of a fourth industrial revolution. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Yeah, that's the bull case, Dan. So aren't there going to be winners and losers? It sounds like you like all of the big players.
Yeah, and Sarah, there's going to be losers. If you look at Adobe, are they a loser? If you look at some of the other sort of large cap names, like they're trying to sort of, I think Salesforce, is going to be a winner, but they're obviously under a lot of pressure from a software perspective. You look at some of the infrastructure plays like a Cisco, they're turning it around. I think it's really more about the second, third, fourth derivatives in software. I look at names like Nebius. I look at names like CoreWeave and the sell-off because it's all, to me, about for every dollar, and this is the most important stat, for every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. $3 trillion that's going to be spent in the next 2 years.
Right. But you, in your view, it's all the hyperscalers that are the winners, the Amazons, the Googles, the Microsoft, Meta, you said, is a table pounder. So everybody that's spending big now.
But I view it as if they're not spending, I actually view it as a negative. Like if Meta ultimately pull back and they raise numbers for next year and they cut capex, I would view that as a huge negative because Zuckerberg right now, wartime CEO, building out what could be monetization, an incremental 40-50% on advertising on the consumer side, and even as they build out on the glasses and on the hardware side. That's the smart move from Meta. I also look at names like when you think about, we've talked about like in the power side, nuclear names like Akko and others. I mean, this all is about the second, third, fourth derivatives. People think that this is sort of a white knuckle, clock strikes midnight moment. I've talked about it. This is nowhere near a bubble. It's a 1996 moment, not a 1999, 2000 bubble moment.
Is there any demarcation line between names you would like and not like? Oklo's a great example where you're either talking about no profits or in some cases, in quantum, for example, minimal revenue.
Sure. Yeah, and Gar, I think that's where you have to be selective in terms of like the winners and who ultimately is going to be there. I think there's going to be other nuclear plays, right? There's going to be other power plays out there. If I see the demand is showing cracks and I see customers cutting back, the ROI is not there, use cases aren't exploding, then we get negative. But to some extent, it's the opposite if you look at where we are right now. And I just think like globally, given where U.S. tech is, this continues to be what you want to own. And I think for the winners, and look, if you focus just on valuation, 1 year out, 2 year out, you missed every transformational tech stock the last 20 years. And that's why I focus on, we talk about in our Ives AI 30, like who are the winners in the different sectors.
All right, Dan, make a full-throated case. Thank you very much for joining us.
Thank you.
We appreciate it. Dan Ives from Wedbush.